So today we are discussing the recent developments with the overtime rule changes, which took effect July 1st of this year, but mainly the additional changes which are set to occur on January 1st, 2025, as well as in 2027 and beyond. And some steps or changes your organization may be facing in the near future if you haven't already. So first, I have a short disclaimer. All of this data is for informational purposes and our interpretation of the new rules. So please, if in doubt, consult your own legal team if there are any detailed questions on your organization's particular situation, if we aren't able to answer them here. So in April, this final ruling, which was first presented in 2023, was announced. The U.S. Department of Labor's final rule, which is titled Defining and Delimiting the Exemptions for Executive, Administrative, Professional, Outside Sales, and Computer Employees. So if any of you would like to research details not covered today, this is the ruling we'll be discussing. So this has changes that will be presented in 3 phases. The first phase took effect on July 1st, 2024, which was a threshold increase of a little under 24% from where it was previously set back in 2020. And the plan is for the second phase to begin January 1st of 2025. This threshold is an even larger jump than the one in July. And then the third phase is that this will be revisited and analyzed again in 2027 and reevaluated every 3 years going forward, accounting for inflation in the future. On July 1st, some of you may already know the overtime threshold increased, but the more significant increase will be this upcoming January 1st. Currently, the salary threshold is set to rise to $58,656 annually. And this is about a 65% increase in a 6-month period. It was before $35,568 annually. So this is a pretty substantial jump. And salaried individuals who fall under this threshold will become overtime eligible each work week beyond the standard 40 hours per week now. So also, it does not matter if the salaried professional is classified part-time. If a worker does not meet the salary thresholds, their hours should still be tracked in case in the future it would need to be proven that there were no overtime hours worked by any individual who falls into that category. So for example, by an audit or something along those lines. Okay. So who are the types of employees this particular ruling may affect? Each of these categories first need to meet the pay threshold previously mentioned to be considered exempt from the hour tracking and overtime pay, plus the following criteria, which is listed directly on the Department of Labor website. For administrative employees whose primary duty is the performance of office or non-manual work directly related to the management or general business operations of the employer or the employer's customers, and whose primary duty also includes the exercise of discretion and independent judgment with respect to matters of significance for the organization. So if the administrative employee's duties fit these just described, plus he or she earns at least the amount of the threshold mentioned previously, then they are exempt from the need to track hours or pay overtime. So the next one is the professional employee, and it's broken into 2 categories, the learned and the creative professional. To qualify for the learned professional employee exemption, all of the following tests must be met. The compensation threshold previously mentioned, plus the employee's primary duty must be the performance of work requiring advanced knowledge, defined as work which is predominantly intellectual in character and which includes work requiring the consistent exercise of discretion and judgment. And the advanced knowledge must be in a field of science or learning, and the advanced knowledge must be customarily acquired by a prolonged course of specialized intellectual instruction. And to qualify for the creative professional employee exemption, the employee must be compensated on a salary or fee basis as defined in the regulations at the rate not less than the rate listed before. And the employee's primary duty must be the performance of work requiring invention, imagination, originality, or talent in recognized field of artistic or creative industry. The next one is the computer employees. And to qualify for the computer employee exemption, the following tests must be met. The employee must be compensated either on a salary or fee basis, or if compensated on an hourly basis at a rate of not less than $27.63 an hour. The employee must be employed as a computer systems analyst, computer programmer, software engineer, or other similarly skilled worker in the computer field, performing the duties such as those. There are more detailed descriptions of this category as well on the Department of Labor website if you feel like there may be someone in your organization who may fit that description. The outside sales employee, the employee's primary duty must be making sales or obtaining orders or contracts for services or for the use of facilities for which a consideration will be paid by the client or customer, and the employee must be customarily and regularly engaged away from the employer's place or places of business. And the highly compensated executive, the thresholds are similar, but with a few additional stipulations. On July 1st, the highly compensated threshold increased to 1,300, I'm saying it all wrong, 132,964 annually, and with a weekly base rate of at least $844. So the weekly threshold is the same as the other professional employees types mentioned, but the annual rate being an increased amount, which these individuals would need to be compensated in some sort of bonus structure within a 52-week period to be considered exempt. And on January 1st, they are to earn $151,164 annually, with a weekly base salary of at least $1,128. And this is all up from the previous annual threshold of $107,432. So the employee's primary duty for the highly compensated includes performing office or non-manual work, and the employee customarily and regularly performs at least one of the exempt duties or responsibilities of an exempt executive, administrative, or professional employee. So what to do next? If any positions fall into the categories which may need an adjustment, there are a few options. First, think about the positions this may affect in your organization. Then either look at each of these individuals in your payroll system or pull a report which shows a full year salary or current salary rate to see if any of the admin or professional employees discussed have a salary lower than the $58,656 per year. If in your organization, if anyone in your organization does fall into those two categories, the positions discussed earlier, this and he or she's salary falls under the $58,656 annually, then the next step would be to determine if it would be more cost effective to increase salaries above the threshold amount, or to keep them at the same salary rate, but begin to track their time so there is a log to prove the hours in case there is ever an audit of those in the future. If there are employees who never work overtime, there may need to be a change in salary, or there may not need to be a change in salary. As long as the time is tracked, there may not be overtime actually paid. So for an example, an employee makes $40,000 a year, salary non-exempt. If this employee works 5 hours of overtime every week, that would be multiplied by time and a half of the base rate. The base rate for this particular example is $40,000 divided by 2,080 hours per year. Then you multiply that calculation by 1.5 to get the overtime rate. For this, the base rate is $19.23 per hour. And the overtime rate is $28.85 per hour. So this total would equal an additional $7,499.70 for an additional overtime pay of 5 hours per week for the entire year. So that would mean, as far as the cost difference, this employee could keep the same salary, but switch to non-exempt status and keep a timesheet or log of hours each week, and the total salary will still be less than the $58,656 annual threshold. So the only difference for this example is change the status to salary non-exempt instead of exempt, and track the hours separately using a timesheet or payroll processing tools such as Gusto or ADP. Another option is to adjust the positions to an hourly basis, along with any overtime at the rate of 1.5 base pay for hours worked over 40 hours per week. Okay, so another issue we have come across in our organization, as well as some of our clients, is whether the pay schedule currently being used is working well for your particular needs. If your organization is having to do a lot of tracking outside of your payroll system, it may not be, such as timesheets and manual calculation of overtime or tracking PTO separately from your payroll system. These items could be streamlined for your benefit and efficiency, but just being on the correct pay schedule for you may help alleviate the issues. For example, if your current pay schedule is semi-monthly, the structure is paid out twice a month, such as the 15th and end of month. And the pay period and pay date fall on various days of the week. So it's not consistent. The actual dates are, but they're not the same number of actual work days on any given work week. It varies. So this pay schedule doesn't really work for certain automated tracking systems with a set weekly pay period and calculating the overtime. One possible solution for this would be to adjust to a biweekly pay schedule, because the pay period would fall on the exact same days of the week of the organization's choosing. For example, the work week could be Monday through Sunday, and for biweekly pay schedule, the dates of the pay month would always be different, but the actual pay day would fall on that same day of the week, such as every other Friday. So for automated time tracking module within the payroll system, it would calculate the pay each week and any overtime over 40 hours and automatically give the correct calculation. Also, some systems, once this is calculated, the hours can be automatically loaded into the payroll. So with this new overtime threshold, there was immediately some pushback on these changes. And I know specifically in Texas, for example, these rate changes did not take effect in July. And there is a chance these January increases set could not actually end up happening right now, but it is best to have a game plan in place if any of these threshold changes would affect your organization, so you aren't left scrambling for what to do at the last minute for the upcoming new year. Or if your organization wishes to go ahead and implement these changes now in anticipation for something that could take effect in the future, even if it's not this January. So with all this information, please research your own organization's state laws and take those into consideration as well, since laws can differ from state to state.